Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar for Trade Day. Steve Miley on the call on TGI Friday, the 6th of May. So apologies for the slight rate running in here, guys. I think we're over the technology problems that we have been having getting into the trade debate. We have a separate development site, so that's why you guys have been fine and we haven't been fine. Nevertheless, that seems to be a problem. Solved that. The webinar is going to be relatively brief in here today. I am not feeling very well, unfortunately, so I'm going to keep it fairly brief. So I'm just feeling a bit under the weather. But we'll run through and we'll cover everything we need to do anywho. So let's take a look at, well, clearly all eyes are going to be on, it's been fairly light in Europe on the data side, not too much price action this morning, and all eyes on the unemployment report from the US. And you've got Canada if you're trading the Canadian dollar this afternoon. You've also got Williams speaking, watch out later. But in just under an hour, you have the employment report. So all eyes on the non-farm payroll number, anticipation here at 391,000, with the unemployment rate expected down to 3.5%. So we certainly going to be watching that. Let's run through 5 things you need to start your day in here. So a really super negative day. I was shocked. The markets don't surprise me very often, but I was shocked at how bearish markets were, the stock indices were yesterday. Really surprising. Not only giving back what they'd gained on Wednesday after the Fed, but then some more. Biggest down day I think since 2020 for the Nasdaq. Just awful trading session. I think it's more that they're actually concerned. The market is concerned. I think the Fed are not hawkish enough. I think, almost perversely, they're not worried about the fact that the Fed being, the initial rally was obviously on the Fed being slightly, less hawkish, de facto more dovish, with, seemingly Powell taking 75 basis points off the table, even though now, I was unsure with whether I was reading this right, but I'm pretty sure I'm reading this right? So they've updated all this now. So the swaps, well, not the swaps market, the euro dollar curve on the CME is pricing in, we're currently 75 to 100. It's pricing in a 75 basis point hike in here, with only an 8% chance of only a 50, with a 90+% chance of a 75 next time. Where didn't he just effectively tell us that that's not going to happen? So I'm not quite sure what's going on there. But anyhow, the market in here, obviously, tech, Nasdaq down over 5%, biggest drop since 2020, and just looked awful. Minimal rebound on the close, but then lower again in here overnight. Jobs day, depending on the survey, so we just looked there, 391, right? 385, excuse me. Oh no, 391. Yeah, 391 I was right. 391. So Bloomberg telling us 380. So around then, unemployment rate expected to fall to 3.5%. Okay. And we know that the Fed are already saying there's a strong labor market. So I don't know. If you could say to me, hey, Steve, I can tell you what the NFP number is going to be this afternoon. I couldn't tell you, let's say it's 600,000. I couldn't tell you if stocks are going to go up or down on that. Or if it came in at only 100,000, I don't know if they'd go up or down on that. I think it's really tricky the way the market's in at the moment. When you get this heightened volatility, not only volatility within the day, but when you're getting the market up 4%, down 4%, up 5%, down 3%, day after day after day, clearly the market is struggling with where it wants to be, which means it's probably not in the right place. These markets stock indices either want to be 10% higher or 10% lower, and they don't know which one it is at the moment. Up until recently, my view was very much 10% back higher. On Wednesday evening after the Fed, they were still 10% higher. After yesterday's price action, I'm really erring more towards 10% lower now. So with everyone else hiking, obviously Bank of England hiked yesterday as well, as expected. You would say it's a dovish hike. We discussed that yesterday. But ECB in here, still sitting on the fence. But we have had I'm talking here maybe interest rates, which remember negative in the Eurozone. The ECB rates are negative, above zero by year end. So talking a slight shift towards more hawkishness from the ECB. European Union's proposed revision to its Russian oil ban that will give Hungary and Slovakia an extra year until the end of 2024 to comply. Yeah, that's pretty much it. Non-farm payroll day. That's what we're watching for today. So where are we? Overnight headlines. Nothing really to add. So US jobs, US futures slip ahead, and bonds as well. So bonds and stocks going in are pretty much the same directions in here at the moment. And the dollar is king. Dollar sweeps back as haven of choice as everything gets sold. So everything down in here. I think they've got that with one of the sell everything except the dollar. The only thing that's going up is the US dollar in here at the moment. Stocks cow as dollar marches to 2-decade high. From Reuters. And then if we go and take a look at what the actual markets are doing, so obviously a massive sell-off yesterday. Dow was down 3%. And if we look where we are this morning on US indices, still further a little dip in here this morning, not quite 1% down. If there's loads at some point. So we're down, where are we? About half. And Nasdaq nearly a whole % down in here this morning. European markets in here, even though the US sold off through the session, European markets, did close, and the US stocks went lower after the closes. So European markets even further down in here this morning, between 1 and 1.5, nearly up to 2% in some places. So all looking very negative for Europe as well. Not as negative if you look at the charts, but still negative as well. What else did I want to focus on here? When we looked at that, let's just look at some charts. Where is it? Here we go. So is this catching up? Yeah, there you go. So guys, so look, I mean, and then what was really interesting as well in here, or not interesting, is technicals. I'm a technical analyst. These work, right? This peak in here, this impulse peak from the end of April, was 43.03.5. On this rebound that we got right at the end of April, stopped at 43.03.5. On Wednesday on the rally, stopped at 43.03, and then the day just above 43.00. So 1, 2, 3, arguably 4 times it's gone and tested this 43.03 level and failed lower. Big failure back low. Back up through there, obviously it's really bullish. It's not going to do that today. I mean, I cannot see it adding 5% or 4%, whatever it is, for the S&P back higher. But you can see in here getting back towards yesterday's lows. And then obviously the target, if it takes out yesterday's lows, then the target is the low from earlier this week down here. So it looks really vulnerable. And if you go to a 1-hour chart in here, just get rid of all the old. So really erratic. So there's where it's failed here. 1, 2, arguably 3, 4 times up at this 43.00 to 03 level, 03.5 level, all the way back lower, and then down here. This is what I would class as a dead cat bounce. Why dead cat bounce? Because dead cats don't bounce. So there we go. The sell-off, bounce, fails, or bounce, fails, and then failing right now and going lower as we speak. Clearly we might get a respite if we get a rebound in here to some extent from the payroll number. As I say, I can't tell you whether the payroll number, if you tell me what the payroll number was, I wouldn't know whether to buy or sell it right now. But I think you just have to be reactive and follow what the market kind of does. And it's the same story for the Nasdaq, if anything more bearish. But the Nasdaq just did get below. So in here, I think so 12,709 3/4. I think we just pipped below there, 705 1/4. So it just pipped below the low earlier in the week in here yesterday, and then almost sitting back down on that low. So Nasdaq looking super vulnerable as well. So yeah, I mean, I can't advocate anything but selling these things right here, right now. Let's take a look at what else we've got going on. There's the dollar index on the daily, made a new high this morning. So the dollar strong. Let's take a look at oil first of all and the commodities. So oil stayed strong and been in a solid uptrend since the end of April. Spiked higher and then came back yesterday, potential negative shooting star candlestick, and then boom, back higher today. If we step into I've got a 15-minute in here. There's the potential shooting star candlestick, that price action there, and it's got it all back. So for me, it's looking to attack that high there for oil. So could only play that from the long side. If it fails at this high and starts to roll down through any of these little supports here and here for oil, you can go short, I think, on a day trade. But for now, playing it from the long side, if it takes out either the low there or this low here, 109, what's this one, 109 109.83. if you're really aggressive, this more recent low here, 110.20, or down here at 109.83. If it takes out one of these, then I think maybe you can go short. Let's take a look at gold. Dollar strength, not good for gold, but they also were in risk off, so gold doesn't really know what to do. Big failure yesterday, so up and then back down as the dollar strengthened and then rebounded. And that's, if you look in here, this rebound in here and gold, if you go look at the dollar, the dollar, although it did make a new high, dollar's back down, so dollar down, and then gold back up, rebounding. So it is following the dollar in here to some extent. Let's go in 15-minute chart. What do I think in here? I mean, no strong view there on gold. I mean, hold a gun to my head and minimally positive. This big negative price action from yesterday doesn't help, but slightly positive for a move back up towards like 1895, 1900. But no strong view there on gold. All right, guys, I'm going to wrap it up. It's all going to be about payroll. So watching payroll, helmets and goggles on. I'm going to wish you all a great trading day, TGI Friday and all of that. Have a great weekend too. And I'll be back with you with another bull versus bear webinar tomorrow. Sorry about the short webinar as well, guys, but just not feeling great. Cheers. Bye.